Thank you very much, and it's great to be here. It's good to have so much graphite in one conference, isn't it? I've never seen 3 or 4 talks one after the other, so you can't get too much graphite, can you? I'll just get my little... Here we go. I'll make this a bit quick. I'll try and squeeze in a 20-minute presentation into 10 minutes. I'll talk about what we've got. First of all, talk about where we are, and then what we've got and what we're doing with it. We've got a nice big deposit up in the Northern Territory near Darwin. We've just finished a scoping study as well, which has had positive results, so I'll go through that in more details in the talk coming up. So there's a slide of where we are. We're about 2.5 hours drive south of Darwin in the Pine Creek area. Historic mining area, lots of gold mining there in the past, so it's a well-supported industry up in that area there. The local people, they know mining, they like mining, they support mining, so it's good in that respect. We're near a lot of existing infrastructure. There's major highways there, sealed highways to access the project site. There's gas pipelines, there's railway lines, there's high voltage power lines. So all that infrastructure is in place to develop an operation like we're contemplating. So that's where we are now. It's a great location, 2 hours drive south of the port of Darwin. So there's export capacity there and good infrastructure already in place to develop a project. Now what we've got now, we've got a very large graphite deposit. It's something which I guess separates us from some of the previous speakers about the graphite project, as ours is a very new one. We only discovered it about 2.5 years ago, so we're several years behind some of the other parties there with regards to test work and development. So we're sort of starting a bit behind the ball from where they are. So it's a big deposit there. We discovered it 2.5 years ago looking for other commodities there. We've only drilled a very small part of it at this stage, about 25% of the total strike length. It's a contact metamorphic zone between carbonaceous sediments and granites, and the granites have cooked up the carbon into graphite. So we've got a nice continuous graphite zone which goes for nearly 20 kilometres, and we've drilled about 3 or 4 kilometres of that at this stage. So there's a close-up there of our resource there and some of the drill hits. You can see there's, it's typical, very, very broad intersections. It's very simple geology here. It's not very complicated. It's fairly homogeneous grades throughout the deposit, and it's fairly continuous as well. There's a cross-section there. You can see one of the main favourable features of the deposit is the orientation of the geology there. You can see it's sub-vertical, it's 100 metres plus wide, and it outcrops on surface. And I'll discuss that a bit later on in the presentation, how that impacts on our costs for mining as well. As you can see, it's very amenable for very low-cost open-pit mining, given the outcropping nature of it. So what we've been doing in the past, since we discovered it, our metallurgical test work has indicated that we can produce a concentrate grade of about 94%, which is often quoted as a marketable grade concentrate. So we can produce that based on our graphite schist there. You can see in that slide too, interestingly, we've got 2 stages in this. The stage 1 is the operation on the site there near Pine Creek, where we have a typical crush, grind and flotation circuit there to produce graphite concentrate. The plan now is to truck that up to Darwin, and our major shareholder, Quimbrook Infrastructure Partners, they're in charge of the downstream processing side of that in Darwin, where they'll build a facility there to produce purified spherical graphite, which can then be used as an input into anodes into batteries. And Quimbrook is a very large infrastructure private equity fund. They invest in renewable energy infrastructure, solar farms and associated battery installations, so they're sort of gone upstream to produce the raw products to go into their batteries, which they utilise in their installation. So there's a nice little closed loop there for the graphite into anodes into batteries. We've also had some test work done in Germany with Pro Graphite, and they've taken our concentrate and they've produced a purified spherical graphite. You can see from there they've got 99.96% purity, and that's just using a low temperature alkaline bake process. Again, so there's no hydrofluoric acid and no high temperatures involved in that. We were very encouraged with that. It was our first sample we did, and we got some good results. Again, like I said before, this is a very early stage project, so we haven't optimised any of this test work. We've done one test work for the concentrate and got 94%. We've done one test for the purified spherical graphite, and we've got 99.96%. So as we go down the track and do more metallurgical test work, we'll optimise all of the parameters to input this, and we'll get more favourable results, I believe, as we optimise where the graphite's coming from and all of the test work parameters as well. We've recently done a scoping study. That's just a bit of a plan there of it. Again, the scoping study was, I guess, compromised to a certain degree by the amount of resource we put into it. there are rules on the ASX to how much inferred resource you can put into a scoping study. So we had limited drilling last year to get indicated resources, so that led to a fairly small scoping study, but it came out with positive results. We used GR Engineering in Perth to do the feasibility for us, or the scoping study for us, and then they've had a lot of expertise too in graphite projects around Australia and internationally. So we were very happy with them and the outcome of the study. You can see there some of the highlights of it. The capital cost there of about $340 million. I think a very compelling component of the study was the overall operating cost there of $423 US per tonne of concentrate produced. We believe that's very competitive, and I'll show you on the next graph there. And that's largely driven by our low strip ratio of the open cut. The scoping study had a strip ratio of 0.8 for the overall pit, but even within that there was a phase 1 pit with a strip ratio of 0.3. So once we increase the indicated resources on our with more drilling with the scoping study, I think you will find very low strip ratios and very low operating costs, which will drive that operating cost lower. And combine that with an increased plant size to lower the unit costs, we can further drive those costs down. And you can see there that's where we fit in with the current operating costs of graphite production globally. The red markers there are China, so you can see there that we're approaching some of the upper end of the Chinese production costs. When we get the increased indicated resources and we optimise the mill size and do more test work, I'm pretty confident we can drive that cost lower, and we can be confident with the competitive with the Chinese producers. There's a little snapshot there just highlighting the scoping study. You can see there it made up a very, very small part of the overall resource. So that sort of shaded area in grey there is our inferred, our inferred resource. That very small area highlighted there is the indicated resource, and you can nearly make out an open cut there, and that was our scoping study. So the scoping study there had 10 million tonnes of material, 7-year mine life. It's fairly easy to see that we can significantly expand that with more drilling, which we'll do next year. So I think it's reasonable to expect that our 7-year mine life in the scoping study will expand to several decades in a PFS with more drilling and upgrading that inferred resource into indicated, and also upgrading the exploration target into inferred resource as well. 2 minutes to go. It's like the football. Big signs coming up. Okay, so there's some just highlights of what we're doing in the scoping study. We'll do more drilling next year to get indicated resources. We're doing some diamond drilling right now. We're doing PQ diamond drilling. We'll get 6 tonnes of material from our metallurgical test work, which we'll do in Perth. We're doing environmental and heritage studies soon as well. We've started the mining lease application, and we're negotiating now with the native title holders to get that granted, and we expect that to be granted in the next 18 months. And we'll lead that into a PFX next year with a significant drilling program coming up in the dry season. I won't dwell on these slides with the graphite market. I think the previous presentations have covered that pretty well. Graphite demand's going up mainly through EV batteries and also battery storage systems. So there's always a demand for graphite. Most of it comes out of China now. Most of the global production for flake graphite is out of China. Nearly all of the refined graphite comes out of China, so there's obviously a supply issue there on one source. The graphite price is also at a recent all-time low, given some of those considerations of the product coming out of China, so there's scope there for that to increase, especially when you look at some of the recent developments in tariffs in the USA. Floor prices are being talked about for critical minerals, things like that announcement made this morning between the USA and Australia for critical mineral funding. So I think you'll find the graphite price will pick up soon. So just a summary there. We've got a graphite product. We can produce concentrate. We can produce purified spherical graphite. We're in a fantastic location. It's early days yet. So we're looking forward to developing that project over the next 18 months into a production project. And we've also got byproduct credits potentially of gallium and rutile. There's gallium within the muscovite mica in the graphitic schist, and there's also discrete grains of rutile as well. So we're doing test work at the moment to see if we can extract that. If we get if we can get that stuff out, we'll reduce our operating costs and be very competitive with Chinese producers. So that's it. Good spot, a good project. We're developing it, so watch this spot, and I'm out of time. So thank you very much for listening.